Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello, stock friends, looking at SPY on the daily and weekly time frame. So after 2 days of a pullback and an increase in volume for the bears, we didn't see that increase on the S&P 500, but we did on SPY. So the bulls finally showed up. I was looking at a very key support, the low of the Fed day. That was 213.44. We formed a higher low compared to that level by about 18 cents. And we closed up near the high of the day, showing a lot of strength over the middle Bollinger Band resistance of 215.24. So that has us looking to fill this gap tomorrow at 215.88. And the 50-day moving average resistance is 215.97. And obviously, if the bulls break this level up here, 217.53, that will be very strong, showing higher lows and higher highs. Need the bull volume to pick up, just 70 million here. And we're seeing some after hours volume still come in, but not an increase over volume for the bulls. Certainly a very bullish engulfing candlestick, but not the volume that you would anticipate to see with that kind of bullish candlestick. So the weekly time frame, that 10-week resistance right there at 215.85. And again, the S&P 500, always worth comparing SPX to SPY just to note some differences, some little differences. But that 10-week resistance rejected the price last week, and it's 21.6650. And a close above that level this week would certainly be bullish. With 3 trading days left to go, the bulls would have to maintain strong over the next 3 days. So we'll be watching that level for SPY. It's 215.85. And let's look at the hourly for a turnaround here on the hourly chart. So we had a very clear bull break. This is the Fed reaction. Nice strong move. Then we lost the 20-period moving average support. Look at this 8-period exponential resistance, this light blue line. 1, 2, 3, 4, 5, 6 rejections back on Friday. Another few rejections yesterday. And then a bunch of pre-market bouncing all around. Very bearish start to the day. Pre-market. And then the bull showed up right away. Rejected from the 100-hour moving average resistance. Just like we rejected from it pre-market. Finally getting over it. And now we back tested it and held it. Look at the low bear volume on the consolidation. And then the spike in the bull volume at the end of the day. Back testing and holding that support of 215.22. So all hourly moving averages are back as support. You can see this gap here. There's a gap there that's, I highlighted that on the daily. And we're seeing if the bulls can turn around this trend. We see that higher low compared to the Fed day, and we zoom out even further. 10 days, we can see the higher low pattern and higher high pattern certainly still maintained. Need to continue setting those higher lows and higher highs for the bulls to continue strong here. And that's that. I appreciate you watching. I will see you tomorrow.